your portfolio. And if you remember, I did 2 weeks, I took to do one module, first module, where I focused more on the risk part of the business. You must be wondering why risk and why not returns, because that's what we are all after. But we like to do things a little hatke, little different, because we believe that pehla risk बहुत important है. Client should never lose his money. That is the first thing we should try and practice. So we focus a lot on risk. We explain to you why you should appreciate risk and how important risk is. And if you manage risk well, you can manage big clients very easily. And also the second counterintuitive thing is that, we believe that high returns means high risk. Sometimes you also think a little differently. Why can't high returns come with low risk? And that's exactly what Mr. Sunil Jhaveri, MisterBond, and Next Level, we've always been talking about one concept called investor experience. Not only investor returns, but investor experience. And part of the investor experience basically means a great journey, very limited risk, very decent returns, and a great journey. And in keeping with that, tomorrow's session is going to be about the MisterBond solution, which actually shows you how you can earn good returns and without taking too much of a risk. And last week, we also exposed you to a tool about which we'll again have a program where you learn a lot more about it. That is a ranking tool, which is based on rolling returns, which means that whatever portfolio you create for your client, it stays that way for at least 3-4 years. It's not that every year you have to start switching and make mistakes. This is a very unique ranking calculator and a fund basket. We finally present a fund basket which stays unique for a pretty long period of time, and we will talk more about it in the subsequent programs. This is what Sunil Jhaveri last week spoke about. And now today, we will figure out from none other than Madam Radhika Gupta. I don't need to tell you much about her. She is a person, as I last time also said, somebody who's on Wikipedia. I mean, how much can I talk about a person, of that kind of a personality? She is known to all of us as a great influencer, and also happens to be CEO of Edelweiss Mutual Fund. Mr. Sunil Jhaveri will talk to her about investor experience in terms of what do they do when they design their solutions. Okay, and today I was also reading that she is anyway a big influencer, winning awards after awards and being featured in several media, several places. Incidentally, today she has been also mentioned by Economic Times in this segment called 40 under 40. That means a top 40 influencers under the age of 40. That's what I believe. I was quickly glancing through that. So she has just today that's happened. So I think that's the latest, and I'm sure she'll continue being acclaimed by the society because she's such a great influencer. And it's our good luck, pleasure, and maybe blessings to the Pathshala that in a very short duration of about 6 to 8 months, we have been able to get her to come to speak to us the second time. But today she'll be speaking on a more specific area of investor experience, and something for which both Sunil Jhaveri, and Next Level, all of us, we believe that this is the path that one has to follow of investor experience rather than running after returns and then not getting business for a long time, because people keep the way you switch products, people also switch their decision of investing. So how to have a consistent investment from a HNI customer, a rich customer, or an average customer for a long time, provide him investor experience. Investor returns is a part of that investor experience, not the only thing. So without much ado, I have already taken a lot of time. I would like to invite Madam, thank you very much for coming here again. And of course, Sunil Jhaveri, who is now a part of Pathshala. Pathshala is his also now. And it's a pleasure to have him as a partner in this platform of ours. Welcome.
Thank you, Dharam sir. Thank you. Good evening, Radhika.
Well, thank you. Thank you so much, Sunil. Thank you to the entire team for having me today. I was telling Sunil just before I joined this call that, lockdown can be a slightly depressing time. And yeah, today was a day of good news, but no better way to celebrate it than with fellow MFTs, right? So thanks for having me here today.
Absolutely. I think we'll all gift you a cap now, because there are too many feathers in your cap, in the existing cap right now. And I'm sure you'll need many more caps to fill more feathers in your cap, because I missed your under 40 by almost 20 years now. So the unfortunate part about 40 under 40 is that people know that your age,
Yeah,
ladies.
exactly. Someone actually wrote to me today saying that, Madam, I thought you were 45. One AMC called CEO. I said, yeah.
Yeah, that's what I'm saying. So at least now the cat is out of the bag.
Yeah. So that,
So Radhika, what we have been doing in the last few sessions is talking about risk and reward. This entire theme itself is about risk and reward, how to select funds, how to select schemes, why, the importance should be given on investor experience rather than investor returns, etc. So under that theme, I have seen that not many AMCs concentrate on giving solutions to their investors. Unfortunately, they come out with these NFOs after NFO. So it's like a mid cap NFO and a small cap NFO and so on and so forth. As against that, I have seen with your AMC specifically, not because you are the sponsor for this month's program, but I have definitely seen, I have interacted with your product head, Niranjan also, I've interacted with Deepak also, and of course, very closely with you also, that you insist and you think about investors, their experiences, and then you come out with products which will be suiting the needs of the investors. The first product that comes to my mind is the the pro-cyclical balance advantage fund. So far, it were all counter-cyclical. And in the current year, in the month of March 2020, also when the corrections happened, I was skeptical whether you'll be able to protect the downside. But I think your scheme actually delivered the best return in terms of protection of downside by falling by almost only by 8% versus the rest falling by 10 to 20% or whatever. But that's not the question here. The question is, how did you think of coming up with a pro-cyclical? In the current scenario, of course, it's doing wonderfully well.
so thanks, Sunil. And by the way, everyone's going to forgive me because since I'm also eating casually as I talk. Because
Yes, as I said, it's a very informal chat. So please carry on with your food also at the same time.
So I'm like happily eating as I talk to you guys.
Sure.
So pause before I answer the question. I love the fact that you pointed out ये जो आपने solution की बात की है ना, I think this is a very important thing that and not many people talk about it. I feel in our industry we have a lot of debates. We have debates on active versus passive, equity versus fixed income, etc., etc. And there are long media debates. And the fact is, किसी investor को ये समझ ही नहीं आता है. You ask my father what is the difference between active and passive. I am telling, and he's an informed investor, the decent sized portfolio. He has no idea कि active और passive का क्या फर्क है. I think we need to change, and at least for us, the conscious effort has been focus on things that solve a customer's problem. Whether they're active, whether they're passive, whether they're smart beta, whether they're semi-smart beta, these are all beautiful industry terminology to justify
unnecessary jargons to show off.
Yeah, or to justify our compensation. I should not say compensation.
Sorry, I have to come to that question also, but yeah, a little later.
So I think our approach, we run a product committee. And we don't do too many NFOs, you're right. One question, and I'm saying this because I think MFDs should also ask this when they're evaluating funds. When you look at any fund, I think the question to ask, Sunil, is ये customer की क्या problem solve करता है? What consumer problem does this solve? And I think when you have that clarity, does this give him access to a new idea? Does this give him the same return at lower risk? Does this give him access to a new market? ये करता क्या है किसी के लिए?
Correct.
How is it useful? And I think if you as an MFD ask yourself this question, you'll never grapple with should I do this NFO or not, or should I do this fund or not? And I think that's the question. This discipline has come in the last 2 years. Now on BAF, I remember 2-3 years ago when we started marketing BAF, and this was the first experiment for me also. People kept saying कि आपका BAF बहुत अलग है, and the traditional PE-based BAF is the right one because we've all been taught buy right, sit tight. And our only point is why is one narrative right? So the narrative of our BAF actually comes from a global narrative, which is that momentum works. By the way, another AMC has just launched a momentum fund. But fundamentally, momentum works. Things when markets are doing well, they continue to do well. The notion of a trend works, just like the notion of buy right, sit tight works. Both of these notions work. We just chose to do a product this way, and we didn't do it necessarily to be different. We felt that the purpose of a BAF, what problem does BAF solve in a consumer's portfolio? BAF basically should give you extreme downside protection, and in really good markets give you a lot of upside. When markets are up 5%, it really doesn't matter what BAF does.
Absolutely.
Momentum does that. Value doesn't do that fundamentally. And this is what you saw in March. In a market like March, as markets keep following, the traditional buy right, sit tight guys will keep increasing equity exposure. We will cut it. So these kind of trend-based models do a very good job of protecting extreme upside and giving extreme downside and giving very good upside participation. So they solve a good consumer problem. That was our thesis behind BAF.
So that was absolutely a need and a solution approach again, because whenever I tried to sell an NFO for the mutual fund for any AMC, I insist that I will not sell it as an NFO. I want to pitch this as a need and a solution. And that's what we did with Bharat Bond Fund also, your launch, and we will talk about that. Coming to BAF again, now, of course, you protected the downside in March 2020. But we've seen many such instances of really huge volatility of 1,700 points, 2,000 points, markets correcting, etc. Those are the days when markets, if they had corrected by 3.5%, your BAF corrected by 2.5%. The rest of them, which were counter-cyclical, corrected by much less, 1.5%, etc. So is this a short-term phenomena, or will you be able to, going forward, repeat the same performance of what you did in the month of March 2020? How should the MFDs and the investors see this BAF? Will it protect the downside? Because what we've seen in short-term volatility, it has fallen as much as what I would say, because you are 70% in equity versus 100%, you have fallen 2.5% versus 3.5%.
So I think this is a super question, Sunil. And the problem is people label all kinds of corrections as the same, and it is nuanced. So let me give you two scenarios. One kind of market correction is a 1 day kind of correction, a 1-2 day kind of correction. How much it falls then is actually somewhat dependent on the equity exposure and also how the core portfolio does. We tend to hold a very defensive core portfolio compared to our peers. We know that in very fast rising markets, we stand this risk. So one of the reasons, despite 70% exposure, if markets fall 3.5, we'll still fall 2 and not more, is because of the defensiveness of our portfolio. So short-term corrections, by the way, in any scheme are very, very difficult to predict. There are two kinds of sort of corrections. If markets are up, down, up, down, up, down, which is what I call a non-trending market, BAF as a hedging model.
Yeah, so my question was, how do we see that BAF and where will it perform and not perform?
Yeah, so that's the answer. So BAF will perform well in trending markets. If
either upward or downward.
Or downward, assuming the core portfolio is neutral. So BAF will perform really well in a year where markets are down 30, BAF will be down 10, straight line down. BAF will perform really well in a year like 2017, where markets, and this is something people don't talk about as much. Markets are up 40%, BAF will do really well. The other guys will sit on low exposure. BAF will do less well in markets that are like this, which are non-trending markets, because that is the nature of the beast. Usually we believe markets move in large trends, and if you can capture the large victories, right, you usually end up being okay. One of the things that we have done over the years is, knowing that we don't do as well in trending markets, we prevent the model from getting whipsawed too much. So if he's every day going from 60 to 50, that we have 5-10% of fund manager discretion, so that you're just not paying costs the whole time.
Correct. I've been doing my own analysis, because we have our own solutions where we move money from aggressive to conservative, which is BAF, and back to aggressive when the markets are cheap. Naturally, because your BAF is pro-cyclical, and in the last couple of years, the markets have only done well in spite of this March 2020 corrections. The results there are outstanding. I mean, so to the audience, I would only say that a combination of schemes of Edelweiss, because large cap I've seen, your mid cap I've seen, they are really in the top 5 in terms of my ranking methodology also. And I've done that, and I did that last week, where I showcase some of your schemes, how they are in the top 5 on a consistently high returns and a consistently high returns adjusted for volatility. So I would strongly recommend a combination of Edelweiss BAF along with Edelweiss equity side for the smart solutions of MisterBond. Now, yeah, please.
I do in my portfolio, since you said combination, personally, since everyone's talking about skin in the game these days, my core portfolio is BAF, and my satellite portfolio is the mid and small cap schemes of Edelweiss.
Excellent.
So my core exposure through BAF, I get better kind of returns than large cap with lower volatility. In fact, I do an SIP into BAF, and my SIP returns XIRR is probably 14%. And then my satellite is this mid and small cap. So that's one approach, very similar to what you're saying.
Excellent. Now digressing, and since you mentioned about this compensation issue and the debate, and I saw you on CNBC also today, and some of our members were praising it, saying that, it's a great move, they will have skin in the game, etc. Your thoughts on that for 2 minutes, and your warning for the MFDs on this matter if this goes unchecked. Because personally, I feel that this is not really sustainable. This is not the right way. This is micromanaging the industry. It's like saying that, the RBI employee should invest 20% in GSEC, or the bank employee should invest 20% in the products which they recommend, or the reporters, the business TV reporters should invest 20% in their own recommendations.
Or my brother, who's a tobacco trader, should spend 20% of his
20%. So your thoughts on that for 2 minutes for the MFD community as to why it should not be encouraged, or your thoughts otherwise.
And I've spoken too much about this issue, unfortunately. So I'm only going to.
I know, I'm aware.
So I will say two things. I have no problem with the spirit of the circular. And I also want to tell you guys that for everyone who's saying skin in the game, 70% of my net worth is in Edelweiss AMC schemes. That number is probably 90% for Harshad. It's very high for Dhaval. It's very high for Deepak Jain, who heads sales. It's very high for our product head. And I have no AMC policy or ad or regulation that I need to do this. We love our products. We trust our fund managers, and we have most information about our schemes. We don't need a regulator to tell us this. That said, you want to put it on paper? I have no problem with that. The spirit is good. The problem is when the semantics get into trouble. This law doesn't apply to 5 of us. If it applied to 5 of us, Sunil, I wouldn't be saying this. It applies to dealing people and junior analysts. It applies to a head of operations.
जो 50,000 1 lakh रुपए जो कमाते हैं, they will be having their own expenses. They'll be having their own EMIs.
12-15 लाख आदमी
already deduction हो रहा है. So the take home will be only 40-45% take home हो जाएगा with this.
I was talking to senior enterprise heads who are, and we are a young team, okay? We are not, we don't have 50-year-old heads of enterprises. We are a young team. All these guys are in the 30-40 lakh bracket. They don't save 20% of their post-tax income. Right? EMI की reality होती है, बच्चों के खर्चे होते हैं. There is life. You cannot force someone saving quantum. I mean, my parents couldn't force how much I save. So that is problem one. And problem two is asset allocation. We don't have many schemes, Sunil, you know this. This circular requires that me, Deepak, my product head, my CFO invest in all 23 schemes of Edelweiss AMC.
Oh my God.
In proportion to the AUM that we have. So if I happen to have 80-20 debt equity, then my asset allocation goes for a toss. So in fact, it's taking away the work that you advisors do on our asset allocation.
So ये हो गया कि you are dissuading somebody to come into the mutual fund industry altogether. Even on the AMC side, अब तक तो MFDs के साथ हो रहा था. अभी तो आप बोल रहे हो कि AMC के साथ भी ये हो जाएगा.
And the reason, and I don't need to speak about this at a point when all my peers are quiet. The reason I speak about it is not me. This doesn't affect me. I can live with this. I speak about it for my team, but I also speak about it for all of you. Because if all of us tomorrow, who is to say that we are going to say 20% of MFD brokerage should not be in schemes they distribute with a 3-year?
उनको proportion में बेचो, दे दो, units दे दो, OC AMC के.
So who is to say that is not going to happen? So if you let people, there is a spirit that is okay, but you can't micromanage this. My liquid fund manager will have to make sure 50% of his net worth is in liquid funds for 3 years. You please tell me, as qualified financial advisors, which sense does this make?
I hope better sense prevails. So let's move on. You're the first ones to move eastwards. Look eastwards. Most of the जब भी सब AMC ने देखा था कि global funds launch करना है, तो या तो European fund किया है या US fund किया है या global fund which includes US and Europe also. आपकी AMC ने China fund launch किया था. Was it well designed thought in terms of कि ये सब काफी सारा यहाँ पर तो हो गया है in terms of the number of NFOs launches etc. अभी eastward देखते हैं, and now we know post pandemic that China is the only one who is really benefiting out of what has happened. आपको पीपी सूट्स चाहिए तो वहां से मिलते हैं, आपको ऑक्सीजन कॉन्सेंट्रेटर चाहिए तो वहां से इंपोर्ट करने पड़ते हैं. So
कौन
they
सा?
have managed to destroy the world in terms of the virus issue, and now they are benefiting out of it. But having said that, I'm sure the China fund must be doing really well. I've not tracked it, so I'm just asking you that question.
So, Sunil, my take on this is this. I am quite amused by the interest in international investing, and I hope as long as it's done responsibly and in good funds, it's a great thing. Our history with China is this. To be frank, we acquired 5 international funds from JP Morgan. When I had just turned CEO, this was 2017. इनका टोटल AUM इस पूरी बास्केट का 100 या 200 करोड़ होता था.
Wow.
We would just go promote them in the market because we feel that this is a part of your asset allocation. And if you want to do an asset allocation, it has to have a developed markets component and it has to have an emerging markets component. And emerging markets is effectively China outside India. So we've been promoting it. Incidentally, what some people don't know, and I learned this from Google, is the China fund happens to be the single best performing equity fund across all AMCs, across all time horizons. It is my highest selling fund on my website, by the way.
Wow.
It competes with balanced advantage fund. उन दोनों का चक्कर चलता रहता है.
No, this is the reason why I wanted to bring it to the light of the MFDs who are viewing us.
And I think it's an important category because emerging is important. And if you have to look at emerging markets, you have to look at China. China has also turned from an export driven economy to a consumption driven economy. The themes are very, very similar. And by the way, I must also tell you, this is a very well managed fund by JP Morgan. Its alpha relative to the benchmark is very, very interesting and very high because it's very clear that it's going to focus on technology consumptions and financials and not going to focus on the low state owned, low ROE state owned companies. So that is its story. And I think you've already talked about the fact that China is the first economy that's recovering from COVID. And the last thing I would say is please separate patriotism and investing. I'm super patriotic.
Yeah, absolutely.
You know, those are
I was not trying to go there, but yes.
it's just a good disclaimer, yeah.
Yeah, absolutely. Because right now I'm sure that they must be really, really doing well because of the issues which we are facing, the globe is facing for whoever is responsible for that. Now the second question is for the MFDs to understand कि इसमें आप invest कैसे करो, because हमको कुछ नहीं पता है. या SIP के थ्रू करो या लमसम करो, तो लमसम करे तो कभी करे, और व्हाट आर द बेंचमार्क्स विच हम यूएस में जब इन्वेस्ट करते हैं तभी हम 3 चीजें देखते हैं. द डॉलर वर्सेस द अदर करेंसीज. इफ द डॉलर इज अप्रिशिएटिंग, then probability of the money moving out of emerging markets and coming into US is good. If the interest rates are rising, again money moving from emerging markets coming into the US markets is good. So when dollar appreciates or interest rates go up, emerging markets are likely to correct and US markets are supposed to do well. Is there any matrix like this or any pointers like this for selecting China fund in terms of entries and exits?
I think what you mentioned is valid pointers, but I'll tell you a static approach is not a bad one here. When you think of your customers' international allocation, divide it maybe 50% between developed. Developed, you can do US and there's a whole range of US products, and emerging. And emerging, you can do a China fund or an emerging markets fund. But essentially, I think it accounts for a static allocation. What I do is I actually do SIPs into these kind of funds, into international market funds as a part of my asset allocation. And then tactically, Sunil, when you see opportunities where the dollar is moving that way, then you can increase allocation to this fund. China is also, by the way, I mean, people want to time everything. China is actually a market that's still not at its 2007 highs.
Wow. Yeah. 2007. Yeah. Okay. So that means it's a lost decade again there, almost.
China, see what's happened in China that again people don't know is Chinese investing has changed colors. The composition of the indices in China have changed. In the old days, investing in China, the economy was doing really well. But like you asked, why didn't the stock market do well? It's because the index largely had state-owned companies which were not generating ROEs. It's like holding the, PSU.
Public sector undertakings.
Exactly. Now the market has significantly opened up in the last few years to foreign investors with A shares coming in. And you're getting all of these themes like financials, consumption, technology. I mean, China has got 2-3 companies in the top 10 tech companies in the world. So the color of Chinese investing has changed significantly in this period.
Okay. again, on the debt side, you were the first one who thought about Bharat Bond Fund, and we've covered that in our first episode when we did, Khas Baat with you. Now that Bharat Bond Fund follows a constantly roll down strategy, as you know, that's one of my favorite strategies according to me. What thought was there behind this Bharat Bond Fund, and what was the thought behind the constantly rolling down strategy?
Okay, so the thought behind it, and after this, I also know that well before I joined the industry, you've been an advocate of this. So you should separately talk about how to position this strategy as a solution. But I think from our point of view, the thought is we are FD investors fundamentally. We Indians don't like volatility in fixed income. I always say we are trying to bring, at Edelweiss AMC, we are trying to bring back the fixed income. And I think that's what I would say very simply. And I think that's what a constant target maturity or constant roll down or whatever you want to call it does that. We want to answer two very fundamental questions in debt. कि 3 साल के लिए कितने time के लिए पैसा डाला तो कितना मिलेगा? In this time, how much will I get? I mean, that when you do an FD, that's what you ask, right? Now,
Absolutely.
what RBI does, what happens to the economy, what happens to gold, what happens
It
to
should not bother you at all.
why should this bother you if you want to park money for a 3 year?
So if you allow me, let me explain to the audience what is constantly roll down and what is the emergence of that constantly roll down. So तभी जब 2010-11 I remember March CD करके एक product हुआ करता था, March CD और March NCD, and that is also a constantly roll down strategy. And let me explain. In the month of February and March, जब ये advance tax outflows होते हैं, there is a lot of government spending, etc. Interest rates are on the rise. The yields have already spiked up. So तभी fund manager next year की March CD खरीदते थे. So let's assume the interest rates have spiked up to 10%. Those were the interest rates those days. तो वो उन्होंने 10% की एक March CD या March NCD खरीद के बैठ गए हैं. Since it's an open-ended fund, in the month of April, they will buy 11-month March CD or NCD because it's already finished 1 year. In the month of May, they will buy the 10-month March CD, NCD, etc. So constantly they are rolling it down. Now what happens? What used to happen? March में जो पैसा बाहर जाता था system के, उसके बाद April में it used to come back into the system. So जो yields ऊपर थी, वो automatically April May में yields काफी नीचे आ जाती है. So if you have captured 10%, so I have treated this product constantly roll down as an open-ended FMP, the way we pitched Bharat Bond Fund also. And what do I mean by open-ended FMP? March में आपने invest किया, April, May, June, July आपको जो interest rates नीचे चले गए, तो आपको 10% का पहले तो accrual मिलेगा, और 3 महीने, 4 महीने, 5 महीने के बाद आपको exit करना, आप exit कर लीजिए with some capital gains, and you are out of it. If you don't want to exit, you hold it till next March. So आपने जो captured yield करी थी, less the expense ratio, you are definitely going to get that. So that is March CD, and that same concept is in Bharat Bond, जहाँ 10 साल का पेपर खरीदा है या 3 साल का पेपर खरीदा है, depending on which product you invested, और वो next year 9-month year का पेपर खरीदेंगे, then 8 year का पेपर, and so on and so forth. So that is what we mean by constantly roll down strategy. And the benefit of it is it's an open-ended FMP. जब भी आपको interest rate लगता है ऊपर चला गया, invest then, hold it till maturity. Your returns are more or less at least known to you.
And I would just add a few things here, Sunil. It's super simple, right? You go to bharatbond.in, you know the yield, as you said, and you pick. You have 2023, you have 25, you have 30, you have 31. आपका जो भी client का time horizon is, whatever it is, you pick the Bharat Bond that matches and you sit in peace. And I just want to share 2 more things on this, Sunil, that people may not know. So this whole thing that will you actually get the index return at maturity? Our 2023 is going to come up for maturity in 2 years. We are actually going to beat the index return by a marginal amount. So this case study will be incredible. And this was on an 8,000 crore fund that had flows, dividends, everything, etc.
So what you are trying to say, जो आपने 8% coupon capture किया था, you are going to beat that after the expense ratios and all. You are going to do better than 8%.
So,
wow.
So that will be awesome. And the second thing I want to say to the distribution fraternity is बहुत सारे IFAs हमसे जरा से नाखुश थे because Bharat Bond was not a very high brokerage product.
Brokerage fund.
Yeah, we were restricted in terms of our expenses. Bharat Bond is of course government capped, but we did launch, I don't know if you followed, Sunil, in March, a privately done PSU and SDL fund, which is an index fund format, 2020 maturity.
And you have a PSU and a banking fund also, which follows a similar strategy.
And banking PSU. And both of these are not huge expense funds. Like the 2026 product, which is become a 1,000 crore scheme in a month, is actually a 30 paisa and regular plan product. And so you can use that. And, you know, MFDs will earn something on that. And, you know, banking PSU, I think, is a 50 basis point product. So the thing I'd say is right now we have 6 products, 23, 25, 26, 29, 30, and 31. So that's 6
Wow.
target maturity funds, 2 of which actually now have a slightly moderate expense ratio that is distribution friendly. So I would highly encourage all of you guys to kind of look at this. This is the simplest way to
No,
invest.
Radhika, my take on this is very simple. Joe, as an MFD, if you are not able to guide your investors in the right instrument, which is relevant for them, then we are not doing a good job as an MFD. Advisor, मैं बोलने जा रहा था. Having said that, आपको लगता है कि मैं ये नहीं बेचूंगा तो इन्वेस्टर नहीं खरीदेगा? Invariably, the investors will, go to somebody who is going to recommend it to them because it is relevant for them.
Yeah.
8,000 crore is not collected just because through the distribution system, but you managed it on your own also. I know that also. But ये जो 8,000 करोड़ में से आपने अपनी तरफ थोड़ा सा इन्वेस्टमेंट्स लेके आते हैं, जब भी मैच्योरिटी होती, आप कुछ ना कुछ उसको asset allocation में यूज कर सकते थे. So don't let go of opportunities which are good for your investors. Finally, long term में those same opportunities will be good for you also.
बिल्कुल. And I think, if a fixed income product, अगर fixed income investor इतना agitate होता है fixed income में, if you can solve that problem for him, you capture a much larger share of a customer's wallet. Ultimately, he still does bank FD. If he's not going to do this, he'll go to a bank FD, right?
Absolutely.
I saw on the chat window, I think, Sunil, there was a suggestion to do a dedicated session on maybe target maturity fund. So
next week we are going to do a dedicated session on some of your passive debt funds, and we will include Bharat Bond Fund also in that. So next week, guys, we are going to do a very dedicated session on some of the passive offerings on the debt side in Edelweiss Mutual Fund. और उसमें हम भारत बॉन्ड के बारे में भी काफी डिटेल में बात करेंगे. Either Radhika will join again or Niranjan and Deepak will join. So choices, of course, would love to have you again. So now coming back to a question that हमने जो invest कर दिया और उसके बाद interest rates ऊपर चला गया, what will happen? Would you like to answer that?
Yeah, very good question. So say you invested in, Sunil, a 2025 product at a yield of 7%, hypothetically, right? Interest rates went up by 50 bits. You will have short-term mark-to-market, reality of life, okay? But if you are a hold-to-maturity investor and you hang out till 2025, you will get the yield. I just gave you this 2023 example.
Exactly.
It will be volatile in the shorter term. As the maturity comes close, उसकी duration धीरे धीरे Sunil explained कम होती जाएगी, तो वो भी volatility आपकी चली जाएगी. Like 2023, it's not very volatile because it's gone from a 4-year fund gradually to 3-year, 2-year, 1 year, etc.
So let me give you the example of 2013 fiasco when interest rates spiked up. Income fund fiasco जो हुआ था, तो तभी मैंने एक article लिखा था Wealth Forum के लिए, stay calm, think logically, do not panic. Usme something similar happened, and I was on Wealth Forum dais also when this entire UN cry happened. I said, we are not applying our minds as advisors, unfortunately. This is an opportunity. Let's assume I captured 10% yield in the March CD. I'm talking of the March CD right now, 1-year product. Or all of a sudden the interest rates spiked up to say 13% in September 2013 or something like that. Or it was 7%, it went up to 9%. So I don't recall exactly, but the interest rates went up. So naturally, those investors who had invested in March were sitting on a big loss. There were 2 choices as an advisor to advise your investors कि या तो आप hold करो next March तक, आपको जो captured yield थी वो तो मिलेगी ही मिलेगी. As against that, there was a huge opportunity on the day when the interest rate spiked. जो आपने 9% कैप्चर किया होता in the month of September, and that September to March आपने hold किया होता, that means your returns were more or less guaranteed of that 9% from September to March. So this is what I had written. This is what I had told MFDs also and investors also. And I'm telling the same thing again through this platform कि भारत बॉन्ड फंड जो 10 साल का होएगा या 4 साल का होएगा या 5 साल का होएगा, interest rate volatility रहेगी. But please understand, this is an alternate to a 5-year or a 10-year fixed deposit or a tax-free bond. जो आपके इन्वेस्टर्स शांति से बैठ सकते हैं लुकिंग एट टैक्स फ्री बॉन्ड्स, और बिकॉज वो उसमें वॉलिटिलिटी उनको दिखती नहीं है ना, बिकॉज देयर इज नो डेली नैव। और भारत बॉन्ड में आप जो इन्वेस्ट करोगे तो या तो इस मेच्योरिटी की तक होल्ड करिए, इफ नॉट देन अपॉर्चुनिटी आपको मिलेगी, जो इंटरेस्ट रेट्स नीचे चले गए तो निकल जाइए, या इंटरेस्ट रेट्स ऊपर चले गए तो एडिशनल परचेज कीजिए।
Just one thing I would add, Sunil, from my experience, since we launched Bharat Bond, we have seen interest rate volatility. But because of the structure and people know that 2025 hai, 3 hai, they know the yield, we actually have not had a single client who's come to us and panic saying, मेरे साथ कुछ गलत हो रहा है, आप तो फिर गलत कर रहे हैं, इसकी credit क्या है? वो पूछता नहीं है, because they come in like an FD investor, so they behave also fixed.
Absolutely. It is how you pitch the product. Which is very important. जब आपने एक डेट प्रोडक्ट के तेजे से बेचा होता तो नेचुरली थोड़ा सा जो वॉलिटिलिटी है मार्केट में वो उसके लिए क्वेश्चन होते, बट आपने बोला है इट्स अ टारगेट मैच्योरिटी प्रोडक्ट, तो आपको पता है कि ये 10 साल के लिए रखना है या 5 साल के लिए रखना है या 3 साल के लिए रखना है, सो शांति से बैठे रहो। द क्वेश्चन विच इज कॉन्स्टेंटली इन माई माइंड राइट नाउ, बिकॉज मैंने जब भी रैंकिंग कैलकुलेटर बनाया और मैंने जब भी लार्ज कैप में देखा, मिड कैप में देखा, बैफ में देखा, you were there in the top 5. I mean, I was pleasantly surprised. Let me tell you very upfront. And that's what I told, and I don't know whether you saw the recording of that webinar or not. And I actually created one slide. I said, there is that confirmation bias. हमको लगता है कि बड़ी AMC का मतलब है they will be doing much better than the smaller AMCs or mid-size AMCs. In my ranking calculator, the good, bad, and the ugly will definitely be brought out to the notice of the advisors. On top of that, merit will always be there on the top 5 में. More importantly, मैंने ये देखा कि आपकी जो volatility index थी in the large cap, mid cap, or in the BAF, you may be lower in terms of the returns, high returns in high returns band. We have two scoring methodology. One is the investors high return score, जहाँ you have say 2,000 observations over a 5-year period, rolling 5-year period from 2005 to now. Higher the returns and higher in the returns band, you will score high on that. But at what cost? So the second methodology is investor experience return score, which adjusts it for volatility. और मैंने ये देखा कि आप you may not be there in the IHR in the top 6, 7, but you are there in the top 5 in the IER score, and that's what we recommend. What is it you are doing differently in your AMC and your scheme management?
So I was very happy when you said this, because people often associate large AMCs and this and this. They don't associate us with managing sometimes good quality equity funds, not knowing, by the way, that in mid cap we probably have the oldest fund manager because he's managed the same scheme for 13 years uninterrupted. Wow. That is a separate question. So I think your methodology is interesting, Sunil, because our approach is, so we will never be out of the charts. When you see like right now, 1 year discrete performance, which I think is the stupidest way to measure performance. People say, पिछले 1 साल में उसका इतना return है, he's 20% above peer average. We are not like that, which is what you said. We aim to give consistency of investor experience, and we want people to stay around for long. So we always think that we are going to be consistently above average, and that will mean a good outcome. So if the category is doing this, we'll be a little better than the category, and in the long term, we won't make mistakes. The other thing that we are very obsessed with is being true to label, and this was well before scheme categorization, and don't get me started on this. In the mid-cap fund, and you can see even on our website the history of mid-cap fund, we will never hold a large cap security. We will just not do it. And in the small cap fund, we will hold 65% small cap and some mid-cap. In large cap, we'll run it like large cap. In BAF, we will not take credit. In ARB fund, you'll never see duration. That's just the way we work. And my CIO, Harshad, actually, before this word true to label came, he taught me this concept of true to mandate. He had come from JP Morgan, very process oriented. So he taught me this. And I think that is something that is it's all in our ethos at AMC. So perhaps that shows up in the numbers. And I would just encourage people to look at us as someone who is delivering a consistent experience, and by the way, with no team turnover. I've had no team turnover in the last 4 years, despite sometimes the noise on brand, small AMC, etc., etc. So I think that.
And after ILNFS fiasco, you faced a lot of challenges also.
We talked about that last time.
Yes, we talked about it in the first episode.
Yeah, I mean, it wasn't the easiest run, right? And the good thing is, even today, the schemes are at very good sizes. So, right, mid cap fund is 1,200 crores. It's not a 10,000 crore mid cap fund. It's very liquid in terms, but it's not a 200 crore fund. So, the schemes are also at very good sizes right now.
So does size matter?
Size does not matter in the big AMC is better. Okay, so let me just go there. Size matters in some funds. What matters more than size is liquidity, and we look at liquidity very carefully. Now, large cap funds can take a lot of size, but in mid cap and small cap, I think it is very important to look at liquidity.
Correct.
We actually put on our presentations the number of trading days to liquidate in our schemes. And I've shown this in some industry presentations. There are mid-cap funds where it would take 1,000 days to reasonably liquidate some of those names. So we are very tight on liquidity, because if you have a bad market, and this is to downside protection, and you get redemptions, you will be hammered on liquidity because liquidity falls. And
correct. Either on equity or on the debt side, both sides.
Even on the debt side, you'll notice we don't hold credit papers, and that's a policy. Bharat Bond, some people may not know, we have had 35,000 crores of turnover last year. We have such large purchases and sale volumes in Bharat Bond, 500 crore redemptions in a day, 1,000 crore purchases in a day, in lockdown, seamlessly.
Amazing. Were you surprised that you have, because you have 4-star rated or a 3-star rated based on some of the ranking agencies. My ranking methodology shows you up as the top performer. Were you surprised at that?
No, I was not, because I think your methodology takes risk into account in a way. If I look at, and I'm not going to...
And consistency into account, because we are doing based on the rolling returns versus the others who are doing on point to point.
I think discrete returns is the most stupid metric, because what is discrete returns today? Sunil, 1 year discrete returns is the experience of an investor who invested 1 year ago. How many of your investors sitting here invested 1 year ago on this day, or 3 years ago?
No, people are talking about March 2020 onwards and the returns so far and all that. But according to me, not 5% have participated in that journey.
In fact, on our new website, if you go to the product pages, we are also showing rolling returns so that people can understand this concept, because rolling returns is the average experience of the investor. Your investor entering today is not going to repeat the experience of the last 1 year. In fact, 1 year return is the most stupid metric in the mutual fund.
Absolutely. So, but the unfortunate part is the other ranking, which has become a norm, was a point-to-point return. So that's why the ranking changes, every quarter, every 6 months, etc. But I realized that over 10-year period also, out of the top 10 which we found in the initial stage, only 3 of them fell out of the top 10. So our consistency of selecting the schemes also is part and parcel of what we are trying to now.
Sunil, where we show up well, which is a metric of consistency, just like your schemes, is SIP return. So our schemes look very good when you look at SIP performance.
Right.
And again, SIP performance tends to measure consistency. So I am hoping more people like you evangelize the importance of consistency and looking at rolling returns rather than this discrete fund.
No. All I can say is that the industry should, promote people like us who are trying to get the right ideas into the system. That's all we are trying to say.
Yeah. In fact,
what are your thoughts on the current market valuations?
Okay, so markets are precarious, and I use that word carefully. Firstly, markets always move ahead of reality, and reality today feels really bad. I think, and this quarter will be a very interesting one, because you have to see how much of these partial lockdowns have ultimately affected economy. I think going into Feb, at the end of Feb, we were very optimistic about where things were, because this first wave had come off, the budget had come in, recovery was on track. We continue to hold that view. In fact, in November, we gave a very bullish outlook on equities, which was a very contra call at that point in time. And we held it in our BAF also. I think right now we're trying to be cautious. So that's the road ahead, because you just don't know the extent of the second wave. I mean, 3.9 lakh cases in India.
It's scary. The ground reality is totally different from what we are seeing, unfortunately.
The market is betting that the vaccine rollout will make it work. So in the vaccine versus virus battle, the market is given the points to vaccine. But you have to see how this plays out. So I think the best strategy for MFDs has always been asset allocation. This is the most boring answer to this question. I know I have talked about it
And I also get a flag for that because, I always say that today you have to be in conservative, and we are in conservative since August 2020. But irrespective of that, July 2017 to now, we have showcased on different times and different webinars that we have far outperformed the buy and hold strategy. So like 1 crore in say small cap, just to give an example, in July 2017 became 43 lakhs in March 2020. We were in BAF during this period because we were in red zone. So our value was 98 lakhs. We switched into equity, and then we got switched out of equity in August 2020. The current value of our portfolio is 1.6 crores. And if I were to take your BAF, it is 1.7 crores, by the way. As against that, small cap has marginally gone out of the negative zone and delivered 1.5% return. So there's a huge, so people still ask me the same question. So did you not exit out of equity wrong time, earlier than required? But my belief is that
right. I don't think you can ever get these things right, and I think market timing is the most futile exercise or not. I don't think if fund managers did a very good job with it, they won't use models in BAF, right? The fact that we use models in BAF and we rely on price to earnings or momentum tells
correct.
you a system does it better than a human does, because it is a very, very difficult thing to do.
So all I'm saying, Radhika, is as long as you're in equity as an asset class at any point in time, either through BAF or in equity, because over longer periods of time, I've realized that BAF outperforms your large cap, small cap, and mid cap. Then what are we complaining?
Exactly. So my BAF SIP over 5 years has delivered me 14%, which is, and I think Nifty has done 13 or something. And by the way, most large caps have not even hit Nifty. And with much lower volatility. This is my personal investment. So I am.
Wow. Amazing. Any last thoughts, Radhika?
My last thoughts to all of you guys. So, firstly, thank you for having me. I hope this was at least clarifying about some of the things that we're doing. We can't meet you guys know I love to travel and meet everyone. But I think, I can't do that, but this is a great platform to connect. I would also say these are, and, Sunil, you and I know this, everyone knows this, these are extraordinarily difficult times.
Yes.
And I think two requests I have. One to all of you is to keep incredibly positive, because, and I have these phases every few days where, you feel really negative, you've lost someone that, but, you have to do what is in your control and try and at least contribute to your clients. The second thing, and, we will be doing something at Edelweiss AMC around this, is that this is a time when so many people have lost so much in terms of families being displaced, kids losing parents. I mean, it's heartbreaking. If you guys as MFD in any way can offer your services to people who've been financially displaced so that they don't fall at the hands of bankers who sell them bad insurance, etc., etc., I think you will do we all feel helpless कि मैं क्या कर सकता हूँ इस situation में, मैं तो doctor नहीं हूँ ना, मैं क्या कर सकता हूँ. If you guys can in any way do that, I think it will really fly the MFD flag high.
Brilliant, brilliant. Excellent last thoughts. Thank you so much, Radhika, for coming once again on our show. We will continue this conversation on some of your passive debt funds next week. Most welcome to join. Otherwise, please appoint somebody who will be discussing this with us.
Absolutely, we will, depending on who's there. So either me, Niranjan, or Deepak will be there. And thank you to all of you. I'll leave you with 2 lines, Sunil, at the end, since you and I both like poetry. शाखाएं रहेंगी तो कभी फूल कभी पत्ते भी आएंगे, शाखाएं अगर रहेंगी तो फूल और पत्ते कभी तो आएंगे, आज के दिन अगर बुरे हैं तो अच्छे भी आएंगे.
Wow, brilliant. Unfortunately, I'm a very positive person otherwise, but I penned some negative thoughts last week with my own personal experience of my IT guy's father not getting oxygen, blah, 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 and passing away. So first time I'm not a poet, but my wife is a poet. Yes. But I penned some thoughts which were negative, but I lived by that experience, so I had to write something. It was out of frustration.
No, it is. And look, I've gone through that phase myself. In fact, one of the benefits of this little SEBI circular that came out last night, it was a great distraction from COVID. So my husband was like a good SEBI circular to distract my wife from COVID.
Great.
Thank you, sir.
And Swami sir, please come on the dais. They'd like to say a few words to you, Radhika.
Sure.
Yeah, thank you, Radhika ji. Every time we listen to you, like, we are, hearing you for the first time. We enjoy the lot of energy you bring, and lot to learn from you. The simplicity that you carry and you speak.
Honesty, most important is the honesty.
Yeah, the honesty, and
One
you.
of the few AMCs who doesn't mind speaking her mind, even against the regulator.
You're not like typical AMC people speak or something like that. You speak from your heart, like your individual is like your individual you're speaking. So it's nice to always hear your speech. So it's our pleasure to have you again in Pathshala second time. In the last 6 months, you're already a second time. So we'd like to see you more often in Pathshala. So a lot of things you have cleared today, and also the new, yesterday's SEBI circular, your perspective really, that's, the spirit is there, but executing from the, considering everybody is not easy. So that was the news everywhere, and since morning we are following you. So you are everywhere. I think today is your day, I guess.
Fortunately, she doesn't have to travel. She's there only, but she's everywhere, but she's there only at her house.
Yeah.
Thank you. I've been in a lot of media today. My family is sick of me today.
Great. Sir?
Thank you so much, ma'am. Thank you so much. It's always a pleasure to hear you, and time flies when you are speaking. And a lot of Bharat Bond is like one big message, and I think we will discover it a lot more next week. And a good product should always be, advice to our clients. They should not be bereft of great ideas. And our job is to bring the ideas to them. And fantastic. I think I'm personally looking forward to know more about Bharat Bond.
In fact, last week when when I was going on of investing in US and all this, so I was studying which one to go, and already for my surprise, I saw your US technology fund is doing amazingly. Last almost 80% in last 1 year return. So already I've told my team to keep that in the allocation. So instead of going to the new is coming. So before that already existing, we know that.
Past performance is not the
yeah.
right.
And I think you should look at, I know there are lots of US funds coming.
Yeah.
In tech, we have the best one because and I won't pitch it right now, but I genuinely think.
Yes. Great.
Thank you. Good night.
Thank you so much. Yes, over to Hinaji.
Yes, sir.
I think it's Women's Day and Ladies' Day today. So ladies power, women's power today.
Yes, sir. It was really a superb session and nice initiative by MisterBond कि आप जब भी मिस राधिका को बुलाते हैं तो ऐसा लगता है कि हम उनको बस सुनते ही रहे. मुझे ऐसा लगता है कि द गर्ल विद द ब्रोकन नेक वैसे नहीं उनको इंट्रोड्यूस करना चाहिए, ऐसे इंट्रोड्यूस